Hi all, 11:30 on a Friday, that's Friday the 27th, and we are looking at our daily power list. Okay, so not a lot of power and not a lot of list this morning. Remember, our criteria is very aggressive, over 5 million shares, price above $10, and the range between the highs and the lows, not including the gap, must be at least 10%. So we have only 4 stocks. Let's analyze them, see what happened here. If we cannot find anything or we cannot learn anything from this list, we'll move on. We have other screeners. Let's move on. So the most aggressive in terms of trading range is of course CON, which was on our watch list yesterday as well. Guess what? It closed yesterday at let's call it $14 after trading above 40 at one point. So that's the outlook for yesterday. Remember, it traded from 40 down down to how much was it? Pretty much well, lows of the day 11 under 12. So anybody that got caught on this super ugly move here lower got really punished big time, including a huge intraday gap. Now we opened with a nice move higher in the pre-market, and again the same phenomenon happens where this stock is backed by nothing probably. Again, I don't want to speculate because I don't know, but that's how it looks. I mean, any move higher, sellers are coming in. It lacks any stability or any price stability. Now it's about to drop 18, and now if you're looking for a trade here, the 20 reversal long seems to be an area to look for a trade. Let me enlarge the chart. So that's how the chart looks. This 20 entry is interesting. Let me post an alert here. Maybe I will be able to do something. Anyway, it's so volatile, it's so spready, it's so crazy. The risk, if you enter the trade at 20, the risk will be $2, which is 10%. Normally we trade a stock we want to trade a stock with a 1% risk. Here is 1,000% more risk, not necessarily 1,000% more reward. Okay, so that's a drawback. Now, still, it can be a trade. I mean, this stock has been up to 40 yesterday and can go limitless if volume is going to join in. Right now we see the volumes kind of depart from the highs of the day in terms of volume. The volume are actually moving lower. Lower volume necessarily means in this type of a stock and this type of a trading environment, no good. The stock is up to no good on lesser volume. We'll see later how it reacted at 18. So let's move on. That's the first one. IMS, that's HIMS, that's Hims and Hers. That's a stock in the, I don't know if it is biotech or healthcare or the combination of both. They are selling prescription medication. Again, who cares? Let's take a look at the chart. So again, without looking at the daily chart, because we don't have time, we have only 15 minutes including everything, so we'll have to go like really fast. That's not really how we do it live. Okay, we need to look at the daily chart, assess what's going on. Assuming we did all that, I don't even have the view up on the charts right now for whatever reason. Okay, here it is. So that's HIMS, a small gap up on this stock, which is a huge performer lately. So let's see how it trades. Now looking back, the stock went over a couple of barriers, 48, then you can see the 50, 49, 50, topped at 50, nearly at 52. Now it pulled back and it is playing this 50 level. Right now the support level is clearly a dollar, more than a dollar below, which means 2% on a $50 stock, and no trade. Let's wait and watch. The target on any trade in a situation like this should be the highs of the day. So if we're entering at 50, the target should be 52. Right now the risk is 51, so the risk reward right now seems to be 2 to 1. Do you want to take this type of a trade? I don't want. I myself don't feel comfortable taking a trade with the 2% of risk. Okay, it's not like it's a stock that's up 100% or 200%, and the volatility is unstable. Now, can it really move lower fast? Yes, or higher fast. So you can see the stock dropped a couple of minutes ago, like half an hour ago, from 50 to 49 in 1 3-minute bar plus. So the stock has the ability to move very, very fast. Looks decent for an entry above 50. The VWAP is here, but the stop loss is I don't know where the stop loss is. You cannot use 1 3-minute bar as a stop loss. So let's wait with this one, with this decision, and move on to OKLO. Okay, wow, super ugly. So that's gonna be fast. Huge gap up and go, a pullback, and now it's, I don't know what's going on here, but it's not showing any trend. It's like random moves up and down, above the VWAP, under the VWAP. It's up 3%, but it was into our list only because of this spike in the first minute, so that's clearly a no-no at this point. So we're not going to deal with a stock that looks like this. We have thousands of stocks to look at before we're going to deal with this one. Okay, next candidate, CRCL. The stock is down 11%. Wow, okay, that's fine. Perfect. So this is a stock that should have been traded by us. So what happened here? First of all, it gaps up. We've seen this phenomenon plenty of times where a stock gaps up and then drops like a stone. Now the stock gaps up to 220, drops back to the 210, so that's $10. Keep in mind, this is a mega mover. And now where is an entry short if you assume that this is a bear flag formation here? Hold on a second, let me draw it more accurately. Hold on a second, guys. Above 200. Now, what is the risk on this trade? A lot of risk. Anywhere between $2 and $4. So anywhere between 1 and 2% on this trade in terms of risk. So it doesn't make it like an inviting trade. Having said that, after a spike down and a move higher, and again 1% risk would have been a loser. That's how volatile this stock is. So from 200 it moved up $2 to 202.40. Yeah, 202.30, sorry. And then on the second attempt went from 202 to from 200 to 190. That's a $10 move, and it's bear flagging again. Now looking back at this chart, where was a good entry point? Hard to pinpoint one. I mean, with very little risk, hard to pinpoint one. Obviously it's easy to observe this bear flag because it consolidated above the 200, which is not only a round number, but it took time to work this number. I think that's the only place that you could have entered the trade short with some measurement in terms of risk. Other than that, it's super volatile and a wild thing. Okay, so that's 4 stocks. Sorry to be a bearer of bad news, but that's nothing was really convincing coming out of this list, and now you can see this drop under 18 in CYN. Again, the stock is not shortable, so let's not discuss it. Let's discuss two other stocks that were great movers today. Nike, and you can see this perfect gap up and go and amazing entry at 70. I think I discussed this stock before. That's the entry. You can see it here at 70. And the stop loss should have been the lows of the day. That would have been, let me see exactly how much, and we'll draw the lines here. Lows of the day. Lows of the day, 69.75. Oh man, only 25 cents? Unbelievable. Only 25 cents of risk here. That's something that we don't see very often. So the entry at 70, the stop loss at 69.70. Let's call it 69.70. So that's 30 cents of risk and a beautiful trade in terms of risk reward. Now, where is the target of this trade? Assuming patience, you should be in this trade. And a reasonable target will be above 73. Now, as it moves along, you can elevate the stop loss in the money. So let's say this, right now the stop loss could easily go to this level, 72. And then you lock already $2. And if it moves over 73 or more, you lock more profits. But again, if you push the stop loss in the money too much, any pullback, you exit and maybe you miss a close at 74 and a gap up Monday. That can happen. If your strategy is to close the trading day, which most of us are doing, we're going to close the strategy says close it at 4 p.m. a couple of minutes before 4 p.m. So that's a very good gap up and go play, very technical, looks great for more upside. I mean, it's now at the highs of the day. It's not like the market or the S&P is doing anything spectacular. It's up 0.5% for like forever. And that's one trade. Another one that I have enough time I hope to show you, that was the CRMD breakdown early in the morning. That's a small cap that nobody knows anything about other than the stock is, you can see this huge gap down, the stock is trading down 12% or 14%, and you can see, guys, this perfect entry at 12.75. Why is the perfect entry? Not only because the stop loss is only 10 cents, but it is a tested level. So you can observe the tested level. You can see the triangle breakdown here. And again, this risk here is, you know what, maybe it's more than 10 cents. But you can easily take it with a 10-cent risk using the 1% strategy. And wait, I mean, the stock went from 12.75 to almost 50 cents, pulled back to the VWAP. It's still a short candidate right here, right now, at 12.50 using the VWAP as stop loss. Okay, guys, we're getting closer to the 15-minute threshold. Please remember we have the seminar over the weekend. Do join us if you feel comfortable with, and if you like this video, please share it with your friends. Thanks for being here, and we'll see you in the next video.